If you enjoy this content, please take a moment to rate and review it. Your feedback will greatly impact our ability to reach more people. Thank you. Tell me about Alaska.
It was great. Went on a cruise, saw all kinds of wildlife, and the world changed all around me. I had very limited Wi-Fi, so I was getting a USA Today printed report of news each day and trying to keep up with the world changing. But Alaska was great. It's it's incredible. There's nowhere else, at least that I've seen in the world. A cruise is okay. I mean, it was the best way for the group. We had 9 people, so it was the best way for the group. We had with some, from maybe 11 to 82.
Oh wow, that's cool.
So it was a great family trip, and you probably only could do it on a cruise. You can certainly only do Alaska on a cruise with my 82-year-old mother-in-law. So great. I got kind of tired of the food, and the ship is fun for day 1, day 2, but by day 7, I was kind of ready to get off. And not much happened. It was kind of quiet in the public areas.
I
only missed everything.
Yeah, you only missed everything. Holy cow, dude! They show all the pictures of like presidents when they start their term and then when they end. I feel like I aged in the last 2 weeks. I mean, this has just been totally insane.
Yeah. But it was a great show with Emily. I learned a lot. I listened to it on the way back, and I think it was great.
Hey, listen, it's just so valuable having her as a friend of the show. The work that she does is different from any of the work that I encounter out there, and it's great that she is someone we can call on at any point in time. And also she's so on top of it, like right as everything is happening, she's like already put everything together. I don't know when she finds the time to do it. But it's a real gift to us. So yeah, she did a great job. All right, we have a busy show, and thank you for finding a way to pull all the stuff together for this week's show, because there's no way I was going to. I'm exhausted.
Hopefully, I didn't miss anything. I sort of over the last 24 hours quickly did a news search of the last 7-8 days.
Yeah, so I think you did pretty good. So with that, let's dig in. Starting with the stock market in this economy. And we talked about it a little bit last week with Emily, but we skipped talking about a whole lot of news last week just to focus on the Trump administration's model for healthcare. But the Nasdaq has really taken a beating 2 weeks in a row now.
Yeah, I think that the excitement about AI and all the fun kind of gimmicky things it can do. It can write me a haiku about my trip to Alaska. That has sort of worn off.
Right.
And it seems like the last 2 weeks, the Magnificent Seven have really gone down. And there's been a kind of a rotation in capital, I think, to bond markets and to sort of a broader Russell 2000 kind of market. So this morning, the Wall Street Journal had a story about that, and actually over the last few months, the Russell has sort of begun to outpace the S&P 500 because of that turnaround.
Yeah. Well, it's a concentration of value in the 500.
Right. And but then today, probably the reason it changed since I looked at it this morning, maybe, is that we'll talk about it in a minute, but the GDP report came out, so the stocks have come back a little bit since this story originally, but the main thesis, I think, is still the same, which is AI has to start producing, let's just say, revenue.
Right.
Forget net income and earnings. And compared to the amount of CapEx going in, it's not yet producing that.
I mean, we talked about this, I feel like it's just 2 or 3 episodes ago, how, the main use cases of AI today are embedded within the large tech companies. Meta, I think, is still the best and most obvious example, how they replaced the Apple tracking capability that was cut off with AI that has now made their ad engines perform even better, right? So, if you're an existing company that makes your money off of the highest caliber, software, you can supercharge that software leveraging AI. And by the way, that's not an LLM. It's data science and machine learning, right? So So yeah, I mean, look, the LLM thing, for anyone who has played with it at all, it doesn't do the work for you. It's not 100% of the work. And so you then have to figure out how to change your workflow. And that switching cost and that change, and also that comes with a risk, right? I mean, I'm looking at all these different marketing tools that are out there right now, and it's like, do you really want to 100%, put your marketing on AI? Do you really want to do that, and lose the human connection? Because everyone can see it. You can smell AI, whether it's a video, whether it's text, copy. You can tell when it's been generated by AI. So
yeah, I think it's very similar. We've talked about this before. Very similar to the internet. We can all see that AI is going to be really impactful eventually. Just like the internet in 1995, Netscape went public. We could all see this is incredible. It's going to be great. And then in 96, 97, it's kind of the same thing that we were doing previously, now just thrown up on a web page.
Right.
And it takes a while for entrepreneurs really to figure out how do we use these tools in a way that's scalable and profitable.
Yep.
And we haven't figured that out now.
No, the roadmap is not clear.
Yeah.
Okay, so
that had been true before 2 weeks ago.
Yeah.
But the market just so the next story is Google fails to wow. Google beat earnings. I think this is on Monday.
Mm-hmm.
They beat earnings, but they didn't wow with any kind of unveil AI magic. And they have a lot of cash. They got like $99 billion, but they're spending close to 50 a year on CapEx in AI. And so I think the street is just struggling with how to make the math work. I think the answer is it doesn't work. They're thinking about it in a longer term than 3 months or 6 months.
Right.
So that's similar to the story we just had.
I mean, really, quite frankly, this is not the tech company's fault. It's it's the analyst's fault. I mean, these stocks never should have been propped up the way they were in the first place over the course of the last 2 quarters. NVIDIA maybe because of their actual revenue generation from their actual chips, but all the rest of this R&D, it's speculative, and I think we all have a hunch that it's going to work out. But look, at Jumpstart, we've paid for Gemini for Enterprise, and because we feel like we ought to be able to leverage it. We haven't found a good way to leverage it yet. It requires too much of a workflow change.
I can't tell you how many tools that cost $10, $15, $20 a month that I've tested out, and they're all cool, and I haven't figured out really how to embed it into the workflow so that we can do more things better, make more money for our LPs.
Right, exactly. Tell me about China cutting their interest rate.
Yeah, so China is hard to get my head around, but they are I think of them as sort of the manufacturing floor for the world. They make a lot of the stuff that we buy here at low prices.
Yep.
And they have invested in a whole bunch of real estate, manufacturing, productivity, assets for decades. And they are really struggling now. So they cut their nationwide interest rate. And they're having a lot of real estate, all the problems we have here, real estate and dislocation of some workers where they can't find jobs because they're not qualified for it, and not enough workers in other areas. But it is, it's a command and control sort of centrally managed economy. So they don't get too much information out. So them coming out and cutting the rates and sort of saying that they're hopeful it's going to spur growth, I don't have a lot of confidence that the borrowing costs in China are the reason it's not. They have too much capacity.
I mean, the consumer has softened. The credit card, delinquencies are going up. The credit card balances are going up. I think we've heard over the last quarter in quarterly earnings, the number of people CEOs that have mentioned the softening consumer has doubled. Everyone's talking about it. I was looking at some data on hotel room rates for Nashville, and they're flat below inflation. sort of for the first time in I don't know how many years, because Nashville every
Probably
year,
15 years.
year over year has been just crushing it. So the consumer is soft, and that's going to impact things everywhere. And as you said, China being the manufacturing base of the world is going to feel it as well. So
yeah, I think that's right. So but if they get if they struggle, it's going to be hard on the rest of the world too.
Yeah.
So I think it all is interrelated, which is why we're tracking it.
Yep, agree. Okay, and a little bit about sort of the post-pandemic job market. You know, the pandemic was a very weird time. The whole quiet quitting, you know, I've got all the optionality in the world. We knew the employers were going to evolve and change things, and it seems like that's fully set in now.
Yeah, the unemployment rate went over 4%. And so there's only a few times, if you go down in this article, there's only a few times right there where it's gone below 4% for at least 6 months. I think there are 5 maybe in the history that they've been running it since 51. And we have been there for the past 3 years.
Right.
So it's 3 years, which is not the longest, but it's
the
third
long
longest.
run.
It's a long time.
Run. Yeah.
And we're no longer there. And so it's not that the economy is terrible. I don't think we're in a recession. We had the GDP out today.
Yep. The
job market is not terrible, but it's not as good as it was 2 years ago, a year ago, 3 years ago.
Yeah.
It's just not.
And how do you think the Fed might interpret that data alongside GDP growth?
Let's talk about healthcare for a minute, because I think it's been really helpful in healthcare for the employment environment to be less frothy. We're like in healthcare we need a lot of people.
Yep.
We need to be able to hire nurses, med techs, transport, all the people that actually make a health system run, or make a dentist office run, and make an ambulatory surgery center run. And so I think it's actually healthy for the healthcare economy, or our listeners, for the most part, to have some more interest in staying in the job than just jumping for $1 more an hour. So I think overall we want this like 4%, 3.5% to 4.5% unemployment is probably good for healthcare. If it gets too low, healthcare is hard jobs,
That's
so
right.
we lose people.
That's right.
How the Fed will interpret it this morning when I read this, and there were a whole bunch of people from this article and just the fact that it's gone over 4, saying that the Fed should cut rates more quickly to sort of stay in front of this. They're always behind the curve. And with China kind of having troubles and our unemployment ticking up to 4%, a little over 4, maybe it makes sense for them to cut. But then, you know, mid-morning, we got the GDP report, which we'll cover in a minute. So I think they are probably, my guess is this is the soft landing that they were hoping to achieve.
Yep.
Where, sure, unemployment rate comes up over 4, but the whole point of this article is that in the last 75 years, they've been tracking since 1950, it doesn't stay below 4% very long.
Yeah.
It almost can't, with people moving and changing jobs just naturally. You have some unemployment as the kind of the natural state of things.
Yeah. Okay, so let's talk about GDP. 2.8% growth in the second quarter, and that is much more than expected. I mean, I think it's probably only much more than expected because of how Q1 turned out, right? So people kind of readjusted, and then the GDP kind of came roaring back in the second quarter.
Yeah. Yeah, I think that maybe go down to the chart. The expectation was for 2.1, and it came in at 2.8. And yes, it was sort of on a slow decline, soft landing. Are we going to go into recession? Lots of people were worried about unemployment going up and GDP going into recession. Literally 8 hours ago, I was reading an article by a former Fed Board of Governors, guy who's not there anymore, who was calling for the Fed to cut rates like 2 weeks from now at the next meeting. But I think with GDP being almost 2.8, it's hard to argue that we're nearing recession.
Right.
I mean, there's lots of people on Twitter X that are saying it's a lot of government spending. It's all whatever. But the fact is, the summary is 2.8. It's not close to negative.
No.
So, I mean, I'm not opposed to the Fed cutting rates, but I don't see a real need for that. It's hard to make a case that with unemployment at 4.1 and GDP at 2.8, inflation is still kind of high. We haven't got a report for a couple of weeks, but it's well over there too. It's over probably roughly 3.
Yeah.
I don't know. It seems like the course is pretty good.
Yeah, and now we also are squarely in the presidential election cycle, and so obviously there's a bit of political jeopardy for Powell to actually execute a rate cut between now and November, right?
Yeah. Yes. So I mean, the odds are, well, again, this morning before GDP came out, it was a little over 50% that they would cut rates in September and like 10% in August. So I think it's still probably likely that we look to the September meeting. As a VC, I'm happy for rate cuts, but
Absolutely.
I don't know that we need them necessarily.
Yeah, but we could use a little bit more risk on. I mean, it's still a pretty soft market for us. It's still a pretty soft private market.
Oh yeah, definitely.
Okay, certainly, I think outside of all things presidential, which has taken most of the oxygen in the room, right after that, story of the week has been CrowdStrike, which is a company that nobody knew existed.
Right.
Prior to this really, really bad software push that caused massive outages. I think most felt in the travel industry, people, losing there's thousands of flights.
But a lot of health systems had troubles too. I mean,
yeah, for sure. But I mean,
but not
the big
same.
story. Yeah,
the big story was the airlines,
particularly Delta, which has taken. Are they back yet?
They're limping back, but they're not fully back.
I mean, just a terrible, terrible blow to what I think is probably the best, commercial airline brand in America today. Right.
Yeah.
Just terrible and caused by a software vendor sort of underneath, there's a little bit of their Southwest moment.
Right.
Southwest had this moment was 2 years ago during Christmas.
Yeah. That was self-inflicted at Southwest. A little more than this.
Yeah, but it was software related.
Yeah. I don't know that the passengers care.
Yeah, no, that's the point. That's the point. I mean, we see Buttigieg saying, "Hey, listen, Delta, you owe all of these consumers their money or equivalent in flights." Right. So, I mean, this is going to really hurt the Delta brand. But let's step back from Delta for a second and just talk about CrowdStrike. So,
yeah, let's just unpack what happened as much as we know now.
As much as we know,
it's your space. You probably know it better. But CrowdStrike is a cybersecurity tool. And my understanding is that the way it functions, they are in like the kernel of the operating system. In order to protect the operating system, they need that kernel level exposure. They pushed an update, I think only to Microsoft operating systems.
It's my understanding.
And it didn't work. And not only did it not work, it crashed the entire system.
Operating system, yeah.
And the way the pricing for CrowdStrike was pretty expensive, and they charge by machine. And so I don't know about Delta, but I read another report that most companies have chosen to put it only in their most critical systems because that's where they're worried about cyber risk.
Yep.
But a blue screen of death, a human IT professional has to go touch that machine and try to get it fixed. And that's not a fast process across a company the size of Delta.
Yep.
The other thing that is complicating matters is that the EU required Microsoft give kernel level access to all the cybersecurity vendors as part of their competitive negotiation settlement agreement. And so the reason that they gave access and Apple has not been required to and does not give access to the kernel. So whether that was important for competitive markets or not, it caused this vulnerability. Now, CrowdStrike and Microsoft could have done a better job, obviously, but maybe it makes sense to not have vendors in the kernel. So this is your space. I mean, where should that be modified?
Do you remember SolarWinds?
I do remember SolarWinds. Yeah.
Same thing.
Yeah.
Bad software push.
Yeah.
Listen, this is the embedded centralization of software, and we talk about it a lot, how this can happen, and it's exactly why it's so dangerous to go too far in this direction. Like this, if people want to understand the most likely threat of AI, this is it. It's not the AI, it's the human error in conjunction with the AI, right? We're talking about software pushes. So for people who don't understand, you build software into releases, you always have to do new releases because either you're enhancing features or you're fixing bugs or you're covering up security vulnerabilities.
Yeah, Microsoft changes something or whatever, 100 reasons
software,
you have to change it.
You're always doing new releases forever, right? And so part of that process is you build and you test and you go through QA, and you have to have some kind of environment that replicates the real world where you sort of, are running it through a harness of tests. The idea that a bad piece of code that could totally blue screen the operating system makes it out into general availability such that it poisons this many companies is like unacceptable. Is so many heads have to roll on this, and the reality is it's some mid-level person who screwed it up.
Yeah, who didn't test whatever, and they just said, I'm going to go home and click complete on all these things and not actually test it, because a lot of times when I test it, I don't find anything and I want to go have dinner with friends or whatever. There was some human error that was made.
Yes.
And there weren't enough checks and balances. What I think is scary is that this is where we are today, when humans pretty much wrote the code. Now, maybe they have tools to help them, but we're about to enter a world where AI is
writing the code,
and then that same mid-level person is supposed to read it over and make sure they understand it, but they don't understand it.
And they're not going to read it.
And even if they do read it, the reason they're not doing it in the AI is the AI will do it different, faster, more complex, and it's going to be difficult for humans to. It's cheaper and also harder to do QA on.
Yeah.
And then you put systems interacting with each other, like CrowdStrike and Microsoft, but we have 30 systems that interact, and it's going to happen more and more often.
Yeah. Now, let's just talk about Delta for a second.
Yeah.
This shut down the flights, and that is terrible. But this software didn't get pushed to the planes themselves. There weren't planes dropping out of the sky. Right. I mean, I hate to harp on this. Tesla software gets pushed to the car.
Yeah.
To the car.
Yeah.
On the road.
Yes.
So like you just got to understand the amazing vulnerability that we have introduced by pushing live software into our transportation ecosystem.
And healthcare is going to be,
to me, healthcare
similar.
has been, let's just say this. Healthcare has had so many issues with software over the course of the last year that, to me, this is just yet another story in healthcare. Yeah. It's not worse than the Change Healthcare story. It's not worse than the Ascension story, right?
It's another one.
It's just another one. But this is a much broader sort of vulnerability around the ubiquity of software in everything we do, to the point where we don't even know it's there. The number of people that had their laptops go down and didn't even know that CrowdStrike was a company, never mind that the software was on their laptop, but they didn't even know the company existed. That should kind of tell you the level of abstraction we have from the reality of what's happening with, embedded in our technology on a day-to-day basis. And like I said, laptops are not that big of a deal, but if it starts being pushed into Da Vinci robots, starts being pushed into cars, starts being, the healthcare implications can be far worse than what we've seen today.
Yeah, and we didn't have, luckily, there was no second-order effects. But you could easily have a different problem that CrowdStrike causes a problem and something else, and that it's much harder. The blue screen is terrible, but okay, that machine's dead.
Right.
And what I was thinking about in Alaska is like, it went really quickly. Like within 24 hours before I got my next USA Today terrible summary, the whole world was down.
The whole world was down.
And no one really knew why at that point. And I had unfortunately no Wi-Fi, but you could get to the point where we're dark and no one really fully understands why ever, because there's 2 or 3 degrees of like knock-on effects, and then everyone's pointing fingers, but it's not clear, and that's not even with a bad actor.
No.
So
yeah, SolarWinds was a bad actor.
Right.
CrowdStrike is not a bad actor, right? But it's the same thing.
But the effect is the same.
The effect is the same. Yeah. So look, again, we will continue, I think, to ring the alarm on this particular issue, which is the dependence on software and, our failure to recognize that software is now a high reliability, high potential fatality related industry. We have all this serious regulation. There's a reason why planes don't fall out of the sky, right? Because of regulation.
Doors might fall off, but planes don't fall.
Yeah. That's that. Yeah. I mean, but even still, even with the doors and all the my God, with the Boeing
still,
stuff,
no one died.
Still, no one died. No one died.
Yeah.
That is, that's a miracle, but it's not a miracle by accident.
Yeah.
It's a miracle because of the seriousness of the regulation that's attached. We don't have anything remotely close to that in the software industry. And I'm not saying a startup should have to suffer that kind of, regulatory burden. But look, when you get to the level of a CrowdStrike, you probably should.
Yeah.
You probably should. And after this, you probably will.
Yeah, I agree. And it's also going to be pretty hard. Software is moving all the time. So it's going to be a challenge, but we have to figure it out.
Moving into VC, a company called Headway banked $100 million in a Series D round to accelerate expansion into Medicare Advantage and Medicaid. And this follows a Series C round that they just closed. That was, how much was this, Vic? Their
100 million.
That was
seed was 125.
Yeah, the seed was 125. Yeah. So, I didn't know that much about Headway, but they're a direct-to-consumer business, partnering with health plans to help consumers be able to navigate and find therapists that are inside of their network. And they now are working to expand into Medicare Advantage and to Medicaid, which is great, but also kind of interesting. Just given those two populations and sort of a technology interface to be able to find therapists. I can't help but think about my parents and how I have to do everything for them. But obviously, that's not everybody in Medicare Advantage. There are obviously a lot of technically savvy people who are Medicare Advantage members and, may need therapy.
Yeah. So behavioral health, it's whether you're in Medicare, Medicaid, or in commercial insurance, it's hard to find an in-network provider.
That's right.
And so I think this is a sort of a specialty network carve-out for a plan, and then it's like a network business model. They're getting providers to opt in
on one side.
On the other side, they're getting plans.
Yeah, and
they've raised a ton of money. They have one competitor that's public called LifeStance, but it's a huge opportunity because people don't want to pay out of pocket, and insurance should cover mental health.
Spark Capital led the round, Thrive Capital, Accel, A16Z, and Forerunner Ventures. So kind of the A-list circled around this deal.
Yeah, and I think they have been primarily in commercial, and they're like using this money to move into Medicare and Medicaid.
Yep, exactly.
Which is smart.
Yeah, it is smart. Vitable secures $16 million to provide primary care to small employers. led by Cherry Rock Capital, but also City Impact Fund. I actually just spoke to them today. First Round Capital, Commerce Ventures, and Y Combinator. The companies raised more than $25 million, and they basically are focused on direct primary care for blue collar workers. So I think that's the interesting differentiation here. You normally hear about direct primary care for like white collar workers.
Yeah.
So targeting blue collar workers is certainly a differentiated model focused on in-home virtual primary care and then prescriptions and lab tests.
Yeah, and it's needed, and I hope they figure it out. It's also a really hard place to make money, and so I'm a cheerleader for them. But so far, I haven't seen a model where they actually can repeatedly make money. So bringing this service to it's small to medium size blue collar workforces.
Yeah.
So you have 200 people manufacturing windows or something. That's a hard market, but it's great that they're working on it.
Yeah, I think if you tech enable it though, and you make a lot of it sort of an overlay to existing providers, there's probably a path here to make. I think if you compare it to what these workers currently have in terms of access to healthcare and what is currently packaged, there's probably so much upside just by creating a great technology interface for the phone, right? So I would imagine a lot of what they're doing is really focused on their app and how strong their app is, and then just tying together other services and making those connections and getting the plans to be better used. So look, I'm excited about the prospects of it. It's got a good set of VCs around the table. Yeah. So
and I hope go down a little bit. I think it's like $30 a month per employee.
Yeah, that's awesome.
Yeah, which is great if they can make it work.
That's awesome. All right, so moving on. Google's aborted deals show antitrust long shadow over tech. So this was a big story, but it very much got overshadowed by all the CrowdStrike stuff and the presidential stuff. But Google tried to acquire Wiz. They first were talking about HubSpot. The HubSpot deal didn't go through. Mm-hmm. Then they were talking about acquiring Wiz, which is a cybersecurity company.
Yeah,
and they made a
competitor to CrowdStrike, I think.
Yeah,
or at least
smaller than CrowdStrike.
Yeah, much smaller.
Offered $23 billion, and Wiz walked away.
Yeah,
which has like all sorts of VCs just like, what? Right, freaking out about the idea that you walked away from a $23 billion offer.
When they raised money at $12 billion post-money value less than a year ago.
So what are the key reasons for why this deal went down? Didn't happen.
Yeah.
The first is apparently Wiz feels that they are maybe now, because of the CrowdStrike situation, worth more than even the $23 billion offer.
Yeah.
And Google's not prepared to make that kind of offer based on this news cycle. And then the second thing being just the overall cloud that hangs over these large tech companies making acquisitions at this scale.
Yeah, I think the Wiz founders, this is their second company. So they already had a $200 or $300 million exit. Mm-hmm. So they personally have made some money. Okay. And now I think they're really trying to make more of an impact.
Yeah.
And at the same time, there's a lot of news around opinions, rumors that they were concerned that they'd be tied up in regulatory approval, not able to really invest and grow, and yet not closing the acquisition for a long period of time. And they walked away from it. So I don't know how much of that is rumor and true, but those are the two things. The CrowdStrike thing made them much more valuable because they didn't have a problem.
Yep.
And they want to build a legacy.
Bad week for Google.
Yeah. Yes.
Okay, let's talk about the Help Committee.
Yeah, so the Senate Committee on Health, Education, Labor, and Pensions met today at 10 a.m. We'll link to the part of the video where Bernie Sanders rails for 10 minutes because it's entertaining.
Yeah.
But they are subpoenaing the CEO of Steward Health for all of the activities that he's been involved in over the past 8 to 10 years.
Yep. Everything that led up to the
bankruptcy.
And
they showed his two personal boats. Bernie did. So, Bernie's entertaining to watch. He has pictures of his two personal boats. I forget what it was.
They're not small boats, are they?
No, one cost $40 million, one cost $15 million.
Oh, man.
Big boats.
Oh, man.
And then the company had two planes.
Oh, man.
And they were he was personally acquiring these, and the company was acquiring planes as they were laying off people and shutting down hospitals.
Oh, man.
And so Bernie Sanders does not like that. And
I don't like that.
He chairs the committee, and he's requested that the CEO come testify 3 or 4 times, and he's refused. And so they met today to vote on issuing a subpoena, which they have the power to do, and they passed it.
Wow.
Senator Sanders pulls in private equity as a group as another bad actor, but they don't subpoena anyone from Cerberus or private equity folks.
Okay.
And then the ranking Republican, he's a doctor, I forget his name, he was very supportive of attacking Steward,
right?
But made it clear that his position was that private equity does a lot of good, and we shouldn't paint them with this brush when management had the responsibility to run this business, and where they got financing from, at least the Republican view, is immaterial. Now, how that plays out in the regulatory markets probably will depend on the election, really.
Yep.
But nonprofit hospitals going to switch to for-profit are going to be watched really carefully. And there's really a no-win situation, I don't think. I mean, if you continue to do well, no one gives you a thank you.
Right.
But then if you go bankrupt, which really is what makes America great. Like the fact that our companies and any company can try for something important, and if they fail, it doesn't follow them around their whole life.
Right.
That's what makes our economy work. But it's not good. It's not a good video for Steward. And then he's going to have to go and testify.
And then Steward Health also failed to secure bids on Ohio and Pennsylvania facilities. So, I mean, are they basically, Optum already backed away for them. Are they basically just like persona non grata? No one wants to touch them with a 10-foot pole because, like, why would you? Like, you might want to help those communities, but Steward is just a pariah at this point, right?
Yeah, they're in bankruptcy. The problem, I think, is that they have, over the last several years, they've sold their real estate assets and done leases with MPW, and it's not a lot of assets that are actually there that another health system would really want. And so, I don't know. It's a challenge because they have these hospitals in Ohio and Pennsylvania that no one bid on.
Not even General Catalyst.
No, they already have their one. So I don't know. It's the senators are going to rant about how bad it is, but that's not going to help people in Ohio and Pennsylvania.
No, it's not. All right, CDC report on resistant hospital infections outlines the need for federal investment, Epidemiology Society says. So this is kind of a scary, we already know hospitals, generally speaking, can be dangerous environments, sepsis, things of that nature. But this report, I think, maybe paints an even bleaker picture than maybe what we typically think of.
Yeah. I know of C. diff and Mercer, but there were a whole bunch here they tracked. They're all getting worse.
More antibiotic resistant.
And more common occurrences.
Okay.
Go down to the chart there. And I think the issue is that new antibiotics are not profitable to try to uncover and get through the FDA process.
We've talked about this before. Yeah.
It's not a profitable endeavor to try to address this. And so, kind of not surprisingly, we don't have any in the pipeline.
So it means the government's going to have to take it on.
The government is going to have to take it on. The reason that this came out now is the CDC's budget was cut by 20% for next year out of this program. And so that is making people at CDC upset, and also they're now promoting this that they think it's needed. And whether I don't think the CDC and the rest of the government uses their money that wisely, but someone has to work on these urgent and serious bugs that we have no way to treat.
Wow.
So I don't have a good answer. It's a pretty sobering story. All of the bad thing, it's based on the number of infections.
Mm-hmm.
So those are real people that either died or were in the hospital for a long, long time.
And I mean, the change in rate, it's keying from 2022 versus 2019. There's 7 different microbes that they're tracking here. 6 of the 7 have an increase.
Right. I think this is right. We either don't have a treatment at all, or the treatment is very expensive and very poorly, not very effective.
Stay out of the hospital, folks.
Yeah.
I'm sorry.
Yeah.
I mean, listen, we're going to talk later about how the demand for hospitals are clearly going up, but not necessarily safe spaces to be in for long periods of time. UnitedHealth had a very robust earnings report, and obviously everyone had already priced in the Change Healthcare thing. They were pretty transparent about how much it was going to cost. I don't think this is the first time we heard the $2 billion number.
I think they increased it.
Oh, they increased it?
Yeah. They beat earnings, but MOR was up, and part of what they sort of put into this earnings release is that they underestimated how much the Change attack was going to cost them. So I think that UHG will be fine, but they need to navigate that process.
I wonder where that cost was miscalculated. You know, one of the things that I heard from a company today was that they were able to sort of continue their business, and it wasn't just like claims; it was other things. You know, because Change as a platform does so many different things, and there was one specific thing that Change hadn't gotten back online yet, and so they basically just moved their business over to Waystar in order to advance that particular thing. So I'm wondering if some of the losses, like, are all the losses related to the amount of work or payouts they had to do, or is any of it lost customer base to Waystar or other, competitors? I haven't looked into the report well enough to really understand that, but
I mean, the CEO blamed the MLR being 85.1 versus 83.2, which is what it was last quarter.
Well, some of that was because they had to just take down all the utilization,
difference in
trackers.
Coding intensity.
Yeah,
right.
Yeah,
so they weren't able to
run their business
optimally.
Yeah. Okay. So that's going to turn around in the back half of the year.
And then he said later that the early expectations of what it would cost to recover, which I think is the time, effort, management time, all the effort around putting that back together.
Yep.
And redoing the platform so it's maybe not subject to at least the same process again.
Yep.
They were overly optimistic about how much it would cost.
Okay. Still, good report for them.
Yeah. They're a machine.
Molina shares rise 11%. Molina, I think, is a company to watch.
Medicaid.
I know.
They're mostly Medicaid. They have lots of government. They probably have Medicare as well. But
they're mostly
Medicaid. And Medicaid is a lot of money going into Medicaid.
A lot of money going into Medicaid.
That's actually,
right.
you and Emily were talking about that last week.
Yeah, a lot of money's going into Medicaid. So yeah, Molina, yes. So shares rising 11% after the Q2 results. Now trading at $319. That's pretty strong.
Yeah.
That's pretty strong.
Centene's the other one. They're not out yet, but they'll come out probably next week.
Yep.
I expect they'll be similarly strong.
Yep. And Humana is picking up where Walmart left off. So I think we all know that Walmart has completely shut down their clinic business. Like, they're done. They're out of that business entirely. And they're partnering with Humana, so they're going to reopen the clinics, but they'll now be Humana's CenterWell brand of clinics, and they're opening it in 23 of their stores.
Yeah, I think they're literally going into the same building.
Same building. Of course.
Yeah.
Sure. They're already outfitted. You just swap the logo and the staff, right?
Yeah, I think it makes a lot of sense. That the like the user base or the subscriber base and the customer base, depending on Wellmont and Humana, overlaps a lot. And the companies already have a lot of connections. They're partnering on other things together. So I think it's a good thing for both.
Yeah. Sentinel Well, obviously, because Humana is senior focused.
Right.
So it's not just, I mean, I think they can provide primary care for anybody, but it is senior focused. It's optimized for that. So I'm sure that decision was tracked, closely based on walking traffic and who Walmart was already kind of getting walking through their doors.
Yeah.
Okay. What is next? A lot of stuff, man. Oh, Ardent.
Moving into health systems.
Okay, so I just got to say, it was pretty cool looking at the video of Marty ringing the bell.
Right.
Congratulations, Marty. Congratulations to the Ardent Health team. It's cool to see people that actually take a company public.
Yes.
My buddy Edmondo Robinson from the Aspen program, he's on the board.
Yeah.
So he was like back, he was back there. He was there on stage. So it was super cool to see all the people we know take a company public. So congratulations to all of them.
Yeah, I'm happy for them. They're good.
But how did the IPO go?
It went fine.
It was flat.
Pretty much flat.
So priced perfectly then.
Yes. It was priced well to raise money. It didn't get that one first day pop.
Yeah, no pop.
But I don't think that the Ardent guys care that much.
No, I don't think they care either. They got it out. They're good to go. It didn't go down.
Yes, that's right. It didn't go down. It was successful. They sold it all. There weren't a lot of insider sales. So EGI and all the management team, they all held.
It's a good sign.
Yeah.
It's a good sign for the buyers. Select Medical is spinning out Concentra, which is a primary care unit, into its own $529 million U.S. IPO.
Yeah, which is, again, another positive sign that the market is accepting a new IPO in healthcare. Which is great.
I mean, a lot of services stuff going IPO, which I think is really good.
Yes.
That's really good. Ascension sells 9 Illinois hospitals to Prime Healthcare. Prime is the 5th largest for-profit health system in America, founded and based in Canada, though.
Yes.
And this kind of ties into what you were just saying about nonprofits selling to for-profits, doesn't it?
Yeah. Yes. I didn't know much about Prime. I'm still trying to learn about them. They have a dual thing. I think their Canadian operations are still in a nonprofit
foundation. Yeah.
And the U.S. ones are in a for-profit.
Yep.
But yeah, it is a dangerous acquisition, but I think a good acquisition. They're already in Illinois, and so they're adding to their footprint. And hopefully they'll run it really well and it'll be successful. They do have that. I mean, that would be a fear for me that if they do something like shut a hospital down, people will complain. But they might have to shut one hospital down or one clinic down or something. So I don't know. I'm happy to see it get done. Hopefully it won't have any regulatory problems and will get cleared. And
it also seems like this is, yet another chapter in the road of Ascension getting back to a healthy P&L. They've been making progress, but they're also doing partnerships and they're selling certain assets.
Right.
And it seems like they're still working out of, where they were sort of 3 years ago, those multi-billion-dollar losses that they suffered. So
yeah, I mean, you and Emily were talking about it last week. I think the way that healthcare is going to go if Trump wins, which, is certainly not set in stone, but Ascension's going to have to behave more like a sort of fully integrated for-profit health system that has the diagnostic centers, has a bunch of docs out in the community, has ambulatory surgery centers.
You have to be tighter
they have to get there.
And you have to be tighter with your footprint then, right?
Yes.
I mean,
you have more control over your footprint, so you sort of keep them in your network more.
Yep. HCA crushed it.
Yes. I mean, HCA is the model, and they're phenomenal. They're really good. And I mean, I can remember when the stock was $100 during COVID. It was $100. That wasn't that long ago.
That was not that long ago.
And it's like 300 something now. So you don't normally see a company this size have a 3x like that. And I think they're still chugging along.
Yeah.
And they have a lot of patients coming in, a lot of healthcare demand. And the way their model works is a lot of operating leverage, a lot of fixed costs. So as you put more people through it, they're going to be really good.
Yep. And UHS also had really strong
UHS
earnings.
did well. Their behavioral side didn't perform like I was expecting it to perform, but they have a whole bunch of hospitals that are not behavioral health too, which sort of helped them.
And then finally, Tenet.
Tenet was really the star.
Yeah.
With their USPI acquisition, they acquired it. HCA has built it kind of organically. Their ambulatory surgery centers. Tenet acquired it all, and then they've built on top of that. So they probably have a bigger percentage of the revenue that's already outside the hospital, and so that really helped them. I think they beat by more, but all three did very well.
Yeah. So basically, demand for healthcare services surprisingly increasing post-pandemic in a way that I think people haven't really figured out what the narrative around that is.
I mean, the people running these platforms that have done it for decades don't know how to answer the analysts, like, where's it coming from?
Right.
But it's an interesting time. I mean, we just went through maybe 5 or 6 earnings. Payers and providers are all doing well. And I think it's related to the demand is significant. And there's lots of theories about why. I don't know that I understand it, but there's a lot of people needing healthcare services.
Yep.
And yet the payment structures around Medicare Advantage with the stars getting reversed and Medicaid, it's profitable all around. So it's a good time to be in healthcare anywhere. It used to be that before COVID, you sort of had a correlation where if the providers, if HCA did well, United probably wasn't doing that well. And I think that's flipped now. So they're all doing well.
Well, I think that both the for-profit hospitals and the payers have evolved and sharpened their business models in a way where both can be successful, right? And I think, to the point in the conversation we had last week with Emily, the nonprofits generally have not, right? Yeah. They are less sharp, let's say, in their business models, and so they've got work to do to figure out how they are going to consistently perform at the P&L and also sort of serve their mandates and their missions.
Yeah, that's right. And there's sort of 2 types of nonprofits: academic medical centers. You were talking about that last week.
Yep.
340B, and also they got a lot of
funding.
They get a lot of grant research
funding
that's getting cut.
That's right.
And then you have the non-academic medical, more like Common Spirit, Ascension. Those are 2 good names, but there's a whole bunch of nonprofits that are not, they're subscale. They have 6 facilities.
You got to have scale.
And they're just not big enough, and they're not well run enough, really, to do it.
Yep. Yeah. I mean, the only way you can make it work is you got to have significant scale, right?
Yeah.
All right. So shifting to stories about us. Simone Biles. I was happy to see you pull this this opinion essay from the New York Times, because I was watching a Netflix rom-com with my wife last night, and after we watched it, the Simone Biles documentary.
I want to watch that, but I haven't seen it yet.
Yeah, we put it in queue, and it was very much about what this essay is about, which is how she has overcome her mental health challenges, and just, not just the fact that she's returned, but actually how much courage it took for her to not put herself through something that she was not prepared to do, and how much courage it took to step down from that. One of the things they talked about is just, we cheer these exceptional athletes, but the minute they do something we don't like, we put them through the ringer. And there was quite a bit in the trailer of the documentary about, sort of what she went through with the public backlash, which I remember. It was not nice.
Yeah.
It was not pretty at all. So for her to get through all of that and come back now and, be significantly favored after her American trials to win multiple gold medals again is a fantastic story.
Yeah. I mean, I think it's really important for, I was going to say kids, but even adults, everyone, to talk about behavioral health, talk about the stress related to competing at that level, talk about the anxiety, the need for perfection. And the people that are at that level, it's a lot of risk. It's a lot of risk for her. And for her to go through it, and then I haven't watched the documentary, but my son did, and he said that she's changed the way that she's designing her programs so that she doesn't get kind of bored and not into it herself. And she's doing harder things that she will make a mistake on, and she gives up those like knocks for a second step or whatever because she wants to like push herself, and then it's okay if she and that new style of not having to be perfect and yet still scoring well enough to be in the Olympics. So, you know, top 10 gymnasts in the world is incredible.
Yeah, it's obviously Olympic season, and so it's a great story to kind of cover and remember. You know, how
the opening ceremonies are tomorrow. Yeah.
Yeah.
Actually, when this goes live, it'll be right when
exactly. You know, I gotta say that I'm in the tail end of my camp for Worlds right now. It's the best camp I've ever run, and you know, I feel like I'm a little. I don't want to say that I'm peaking early, but when I look at there being another 30 days, I'm like, crap, I got another 30 days of camp because I've prepared so well up until this point. And there are some physiological things that that come with training at the level that competitive athletes train at, you know, and they're not things you can easily explain to people.
Yeah. When you don't have all the press, but you have a full-time job.
Yeah.
So, so I think all the cameras and press and people asking, you know, what she ate for breakfast because you slipped and maybe you didn't eat Wheaties, you ate Cheerios, all of that stuff in the public light is hard.
Very hard.
But then you have a full-time job and you can be fighting against people in Vegas that don't.
Yeah, and I don't know. I mean, I think I'm just you know, there's because of the issues we have in this country with obesity and some of these other things, you know, that there's so much, you know, the Hubermans and the Peter Attias and the, hey, you know, eat this way, even all the way to the don't die Brian Johnson guy, right? You know, there's so much around your cold plunges and your sleep and your, you know, your diet and your hydration and your electrolytes and your zone 2 work and all this other kind of stuff. And I can tell you, like, okay, if you do all that stuff consistently, you will get burnt out. Like literally, like your hormones, your adrenal system, and like, you know, and that's with great nights of sleep.
Right.
You know, so like we don't have a formula for how to do life perfectly as humans. Mm-hmm. We don't have one. And that's why I think the behavioral health piece has to become much more of a mainstream part of healthcare, because even as, you know, I'm probably body comp wise in the best place I've been in 10 years, you know, it hasn't been without its mental wear and tear, you know, really. Yeah. And that fact in and of itself has been a very disorienting fact for me. You know what I mean? They're like, oh, like I'm dropping all this body fat, I'm turning it into lean mass. And actually that recomposition is creating physiological stress.
Yeah.
You know what I mean? Which is leading to mental stress. So we have to center behavioral health. We really do. There's no out. You know, there's no like, oh, all you need to do is just lose weight. That's not good. That does not fix it all. You know what I mean?
Yeah. I mean, I spent a week in Alaska with no Wi-Fi, so I had a lot of time to think about stuff. I'm reading this book, Why We Sleep, all about sleep
Matthew
stuff.
Walker?
I just made an investment in a sleep company, and so I asked the CEO what I should do to like get up to speed, and he gave me all this stuff to read, which is great. But you know, and I've been thinking that I think nutrition, behavioral health, really like emotional and behavioral health tied together, and sleep are sort of comorbid with every disease. And the friendlier way to say it is they are the pillars to like allowing you to be healthy and live a complete life. And if you lose pieces of those, and I haven't slept except for this vacation. I haven't slept 8 hours that many nights in a row for a long time.
Right.
And I don't think a lot of people sleep enough. We don't eat very well. We're grabbing fast food, and advertisers convince us that this big gulp of something that's basically sugar water is okay to drink.
Yeah.
And then we have ignored behavioral health. So the three components sort of contributing to our underlying health, forget my cardiac disease or someone's, particular situation, sleep, nutrition, and behavioral health are components of all of it, I think.
Yeah. Yeah. I think that's absolutely true. And I think that people still think that behavioral health is somehow behind physical health. And I guess the point I'm trying to make is that at the point when Simone Biles realized she was not mentally in a place where she could compete.
Yeah, she can't compete.
Yeah, but do you think physically she was not in the top 1% of people physically in the country? At that point,
certainly was.
Yeah,
she's the top 1% gymnast.
Yeah, but
if she doesn't have her mental health, she's going to get hurt because she's trying to do things that you have to be in the right headspace to do.
That's right.
Same with jiu-jitsu.
That's right.
You can't. No, you can't. You won't win. You won't do well. You might get hurt if you're not in the right headspace.
Yes. And that can happen even if you're doing all the other stuff right. It can come at any time. You don't really even know why it's coming. You're trying to get to the bottom of it, but that doesn't happen quickly. And sometimes it doesn't even really make sense why it's happening,
Yes. The way you interpret, the way any human, not you, any human interprets an interaction with another person or something on TV or whatever, it could be that you don't recognize it, but the person looks kind of like your grandmother or whatever. It's not conscious. It's subconscious, meaning you don't know why you're feeling that way. But I think it really affects your physiology. It affects your physical state.
So,
good to see that she's back in the Olympics, and that was a good article.
I can't wait to watch her. All right, our AI rundown. I think the AI story of the week, hands down, Meta.
Yes.
Mark Zuckerberg comes out, says that the new version of Llama 3.1, is basically a GPT-4-class LLM. It is open source. It is partnered with all sorts of different companies, NVIDIA being probably the most prominent one, and we can download it right now and play with aspects of it, sort of even at the training data level. So this is a really big deal. Meta has a data set that no other company has, and I'm sure a lot of what they're training it on is going to be proprietary because it's based on all the data they collect from all the interactions of their billions of members across their 4 big apps that they have. But at the same time,
they're giving it away.
They're giving it away. And that, open source is very, very powerful. We just talked about CrowdStrike and we talked about all the things it took down, but we noticed it didn't take down a bunch of websites. And the reason for that is because websites are not powered by Microsoft.
Right.
Websites are powered by Apache and Linux and Nginx and a whole bunch of open source software. And to the degree that many, many companies out there don't have to pay license fees to OpenAI, and they can leverage an open Meta, LLM platform to build their software and build their businesses on. This is massively disruptive to these other LLM companies. And also, final point, the distribution that Meta has is unparalleled. As much as I dislike that, it is unparalleled, right? And I think when Zuckerberg says more people are going to use Meta AI than OpenAI, I think that's right, because more people are opening up Instagram or Facebook or WhatsApp or Messenger on a day-to-day basis than people are opening up ChatGPT. They just are. You open those apps every day, multiple times a day. So I think he's right, and they're just going to, Meta is very good at making little nudges in their UX that drive you to at least experiment with new features. There might be no one better than them at doing that in mobile apps. And I think he's right. They're going to get Meta AI to the point where it's the number one used GPT platform out there. It's incredible.
Yeah, I think I agree. What I took away is that, I mean, you said it earlier, Meta is the best company in monetizing AI today because they have a monetization platform that monetizes attention, and AI is already good on their platforms, engaging with humans to get their attention and then end up learning what they want to buy. And then it makes me an offer that is something I actually want. And well, it makes me a little bit nervous. It will benefit Meta shareholders because they sell more ads. They also have released this open source model, which is going to be great for us, for our portfolio, for the world. I agree. Open source is going to be much more resilient. All kinds of people will play with it, try to break it. And that will lead to a more robust system overall. Zuckerberg is not, I mean, he gives money to charity, but inside Meta, he's doing it for his own company's shareholder value. And I think the reason is he's trying to drive the LLMs, Gemini, ChatGPT, Grok, Minstrel, Anthropic, to be commodities that are all interchangeable and very cheap, because that's what Meta wants. And he's doing that by giving it away free to everyone, which is terrible if you're a shareholder of OpenAI, but great if you're not. And if you're funding, like me, little companies that want to use AI to build on top of something, it's great.
Look, Meta has a history with AI in the developer world. For a very long time, they've been building things and then open sourcing them, and then those things have become much more robust, and that accrues to Facebook's benefit.
Yeah, not even just in AI, in all kinds of systems. Yeah.
Well, I'm talking about way before AI.
Yeah. Okay.
They were doing this kind of stuff, right? React is a JavaScript framework that Facebook built, and it's I
didn't even know they had created that and donated it.
Yeah. So that's what I'm saying. Like Facebook has been doing open source in the developer world for a very, very, very long time. Bringing it into the AI world is them, I think, continuing that legacy, which is a legitimate legacy. Yeah. Right. But also massively disrupting the closed source players. And I have to say, I don't view this as being massively disruptive to either Google or Microsoft, because I think those platforms are just going to take this and load it up on Azure and AWS and say, and what's the third one? Google Cloud.
Right.
And say, hey, this is going to empower our developers and whatever, we're all going to do it. It's fine. I don't think they care that much. But the OpenAIs and the Anthropics, these one-trick pony companies, all you are is an LLM.
I don't see how that works.
That's going to be hard. That's going to be hard because the other players can all meet parity with Meta. Like if they see open sourcing Llama as like a key thing, Google can open source. They also have a legacy with open source technology, right?
They can open source the transformers.
Yeah. They can open source. What the underlying code for Gemini as well, and that's
what all those companies that you named, Google, Microsoft, Amazon, Meta, probably forgot one. They all have a different way to monetize. It's not related to selling tokens.
That's right.
And sure, Google and Microsoft will sell me tokens, but if that gets commoditized, they're not going to lose their business.
That's right.
And if you don't have some other way, you're selling subscriptions to your LLM, that's hard, I think.
Health tech company Commure, also better known as General Catalyst, is going to acquire Augmedix in a $139 million deal as the AI scribe competition heats up. So Augmedix was the hot name in the AI scribe space, I think principally because if I understand it correctly, that is the brand that HCA was partnering with, right?
Yeah, HCA had several partnerships, I think, but Augmedix was the first one.
Right. And then Augmedix had signed a bunch of deals over we've been announcing these deals on the AI Roundup for weeks now.
Yeah, they're maybe not the leader, they're a leader in the scribing world, which is the first adoption place.
Yeah. So then General Catalyst, first of all, they're publicly traded.
Yeah.
Second of all, they're worth $139 million.
That's the head scratcher to me. They have, in the story, I didn't know this before today. In the story, they have $45 million in revenue. And they're trading at less than 4x, 3x times revenue. And I don't know, OpenAI, I'm not going to get it right. They have $1 billion in revenue and trading at like $100 billion.
Right.
So it's like, and after the story we just discussed, I think Augmedix has a more sustainable business model and a much bigger moat. And so,
and yet they're exiting at a price that like we would exit the company at.
Right.
The 130s, 150s.
Yeah.
I mean,
so how did they get public? I mean, 4 weeks ago we talked about going public. You need to be $1 billion, $750 million for an underwriter to take you out. I didn't have with me being away. I didn't have time to research it, but it's a great technology and a pretty good company. They're closing deals, but they're not they're burning money. They're not priced. The debt markets are pretty much dead.
Yeah,
and I think
stock market does not like companies without a balance sheet.
Right. So Commure made an offer for like 169% of the last 30 days volume weighted price, which is sort of a pretty common way to look at it. And that was smart. I mean, I think it seems like there's lots of other AI companies that spend that in a week or a day.
Right.
And they might have wanted to look into this, but they didn't.
So Commure is really sort of the lead brand that General Catalyst is using to build out.
That's their healthcare focused
technology platform. Yeah. It's, they've got health assurance, which is the services business that's going to buy a hospital. And then they've got Commure, where they've been aggregating like Olive and Augmedix and
right. I mean, they put a couple of their, I'm not going to say some of their ones that weren't growing as quickly as they wanted.
Yeah.
Like Olive and something else begins with an A into it. Really is a way to right size the management teams, get it cleaned up, rebrand it. So I don't know. Good to see an acquisition, but a funny price.
All right. And then quickly, we're going to go through these last couple stories. So Qventus AI's discharge planning, a space I'm very passionate about, saved Ohio Health $1.7 million in a matter of months. That's a good story.
Yeah. I mean, it's a small test, but really good results very quickly. So good return and good just to sort of be able to highlight. So we'll link to the show notes and people can learn more about it.
All right. Humana inks a multi-year partnership with Google to invest deeper in cloud Gen AI technologies. So Google continuing to grow their
Google's
space
kind of quietly lining up with lots of health systems and payers
now. Yeah.
In a way that's pretty interesting, I think.
Yeah. And then the final one is that Microsoft is collaborating with Mass General Brigham and the University of Wisconsin-Madison on AI and medical imaging. So a little bit of a throwback to our conversation with Rick Abramson.
Yeah. I mean, I think it's great to see these partnerships with the tech leaders and healthcare platforms, and not just any healthcare, but really some of the best ones.
Yeah.
Because I think that's the way that we're going to get good end products. And I think you're right, Rick Abramson. We did a guest show with him. If you haven't heard that, you should check it out. But he trained at Harvard. I think he was a resident at Mass General. And this is his space. So.
All right. Awesome rundown. And can't believe we got through it all in an hour and 15 minutes. Thanks for coming back. I appreciate your help on putting the show together, and see you next week.
Yep.